In this video, what I want to do is go over the initial entry conditions for this trade and then actually jump down onto the lower time frames and show you exactly what I'm looking for. This is the Euro US dollar, and what I'm going to do is just mark across the swing high there with a red line, and we'll mark off the swing low, the last swing low, with the blue line. So we've got that. So these are the two trend lines that I would be looking at today, and as we hit the lower one and broke it by a little bit, I'd be looking for a long trade. Now this has broken the H4 swing, that swing there, and you don't know it's going to stop. You make the assumption that this market is not going to continue down on one condition, and that condition is seen on the 15-minute chart or the 5-minute chart. We've broken that level. What am I looking for now? Well, I'm looking for an order block, and I'm going to put in a block here, which is from this low here to this top of this level here. And now I've put this in blue, so I just look at my indicator list and take off the liquidity void so we can delete that one. I've got an indicator called imbalance candles, but it repaints, so you don't necessarily trust it, but it can sometimes help you identifying where the liquidity voids are likely to form. So if this candle closes and we've got 1 minute before it closes, what you can do is you can actually see that we've got a liquidity void forming in the other direction. Now this liquidity void isn't finished, because for a liquidity void we need to see at least 3 candles. So I'm jumping the gun a little bit. Where would we place our stop? Well, the stop would be down there. You can see we've got a lovely green candle formation there. So the imbalance candles do form, and they form before the voids, but if this market trades down to there again, this green candle will disappear. And also it will invalidate this void. At the moment you could say, well, I think, not necessarily no, I think that we've got 2 overlapping voids. We're at an H4 level, so the possibility is that this market will make a reversal. Where should we go to? Where are we going to go back to? Well, you can see that we have made a high. I'll just mark that with a block so we can see it quite clearly. So we've got a high here, and then we had a little sideways move, and then a lower high, and this one then gave a lower low. So you've got to be a bit careful, because this market is saying I'm either going down or I'm going to go sideways. You wouldn't necessarily aim for your target to be above here. It could be that this is a 1, 2, 3, 4, 5 correction, and that finishes that correction sequence. Now we're going to go up. You can see where the selling took place in this market, and that is shown by the imbalance candle there, and the selling took place just here. So if you're going to buy this market, that would be my target. So let's have a quick look at that on the 15-minute chart, because really you want a 2-to-1 target. According to whatever you risk, you want to make sure that you make at least twice that amount. So we would put the stop here, we would enter at market, and we'd be looking for 2 times our initial risk, which would take us up to here. So that is potentially a good trade, and that's how we use a sweep of liquidity together with the liquidity voids. We look for them to overlap, and we need another 15 minutes really for this candle to actually tell us, is this going to be a liquidity void in the opposite direction? But at the moment it's looking quite good, but we might come back 15 minutes and just see what this looks like then. The great thing about this trade is it was done live. I didn't know what was going to happen, but pretty much what I suspected might happen happened. We had this overlapping liquidity void to the downside, liquidity void to the upside, and it's underneath the H4 level, which was a previous swing. So this was likely to be a liquidity sweep, but only once we had the liquidity void to the downside and the liquidity void to the upside formed. At that point we're looking for a trade to go long, and our target is 2-to-1. And if you see here that you've taken a trade off the top of that void, stop down there, you would have looked for a 2-to-1, and I've just copied that and shown you where your 2-to-1 would have got you out. Now very importantly, also look at the last place there was selling, because if your 2-to-1 runs above that, then just be a little bit cautious that you might not actually hit that target. It's far better to see where selling was taking taking place in the past and actually maybe set your target just slightly below that. The great thing about this is that the 2-to-1 was just below that selling level. I had quite a lot of confidence that that trade was going to work. Well, what we're going to do now is we're going to look at a sell trade. Unfortunately, the Euro USD may have already triggered a potential sell, and I might have missed it. We will see. I'm going to cover that sell trade in the next video, and you can see that the market is actually live, and this is not a hindsight trade. Well, please like and subscribe. And if you enjoy this video, give it the thumbs up, because I'm really keen to make videos that people enjoy and find useful. Well, thanks for watching, and I'll see you in the next one. So the next 15-minute candle has actually formed, and if I enlarge this chart, you should be able to see quite clearly. Maybe I change the color of this box to something a little easier to see. You see, we've still got the fair value gap. Although it's a small one, it is still there. Now, let's say that you're still a bit edgy about this trade and you're thinking to yourself, well, maybe it'll work, maybe it won't work. What you can do is you can literally wait for this market to move up and away from this area. We know that this blue line is the 4-hour liquidity level, so as soon as it goes above that, you've got a fair good chance that, yeah, this move is possibly going to go to the upside, at least for 50 or 60 points, something like that, whatever it is that target was. Now, what we can do, or what you can do, is you can literally put the liquidity void onto the chart where you've got the overlapping like this, and you've got 3 entry points. You've got number one, you've got the first edge of the void, which is the top one there. So that's the first line of action, and that's where we might get into the trade. When it moves away from this area and then comes back, because it might come back and retest that. So the first level, the great thing about this trade is it was done live. The second level, I didn't know what was going to happen, but pretty much what I expected might happen happened. So now we had this stop overlapping, because those areas are actually pretty tight. Liquidity void to the upside. Whether you get in at the top, the middle, or the bottom, it's not going to make a hell of a lot of difference to your trade. This was likely to be actually goes down here, but only the reason the stop goes there is because you've swept liquidity, and the liquidity void to the upside of a liquidity void to the downside and a liquidity void to the upside. And our target is 2 to 1. This should be, you see here, where the market doesn't you've taken a trade off the top of that void. And so that would be stop down there. You would have looked for a 2 to 1, and I've just copied that. Now let's have a look at that trade where your 2 to 1 would have got you out. Now, very importantly, also look 15, at the last place there was selling. That's 16, because if your 2 to 1 runs above that, there's not an awful lot. Just be a little bit cautious that you might not actually hit that target. Where you get in. It's far better to see voids can be where selling was taking place. If we had a void like this, for instance, and actually maybe set your target just slightly below that. The great thing about this is that the 2 to 1 was just below that selling level. So I had quite a lot of confidence that that trade was going to work. But for us, what we're going to do now is we're going to look at a sell trade. come back down, test that level,
Euro
get in,
USD
place
may
our
have
stop
already
down
triggered
there, and we virtually have the
a
same trade.
potential sell,
So don't
and I
even
might
worry
have
for a
missed it,
second
but
that you
we will
might
see.
miss this
I'm going to
trade,
cover
because
that
very
sell
often the
trade
market will
in the
come
next
back,
video, and you can see that
fill
the
its
market is
boots
actually
again
live,
at the
and this is
liquidity
not a
void,
hindsight trade.
and you've got
Well,
into
please
the trade.
like and subscribe.
Well, I hope you enjoyed this
And
video.
if you enjoy
Please
this
like
video,
and
give it a
subscribe,
thumbs
because
up,
that really
because
helps
I'm
the
really
channel.
keen to make
And
videos that people
once I get up to
enjoy
1,000
and find useful.
subscribers,
Well, thanks
I'm
for
really going to
watching,
get
and I'll
into
see
the
you in the
serious
next one.
stuff. So please subscribe as well. Thanks very much for watching, and I'll see you in the next one.